Welcome to our podcast, where we share our professional knowledge and experience for those considering commercial mortgages or loans. If you are in need of commercial mortgages or loans, contact us for a no-obligation free consultation. Let's start today's episode. Residential Property Bridging Loans Guide, Essential Insights Explained. Residential property bridging loans can be a helpful financial tool when you're navigating the property market. These interest-only, short-term loans are designed to bridge the gap between the purchase of a new property and the sale of your current home. They can provide the necessary funds to help you seize an opportunity, such as buying a new house before selling the old one, or resolving issues with a broken property chain. Understanding residential property bridging loans. Residential property bridging loans are a type of short-term finance that can help you through a temporary financial gap. These loans are usually regulated and can be ideal for situations where you need to purchase a new property before selling your existing one. When taking out a bridging loan, you'll find that it's a secured loan, meaning it's backed by an asset, such as your residential property. This way, the lender has some assurance in case you can't meet your repayment obligations. Keep in mind that these loans are designed for short-term situations, so interest rates may be higher than traditional mortgages. The fees associated with bridging loans may vary, but you should anticipate a mix of arrangement fees, valuation fees, and legal fees. Lenders may also charge early repayment fees if you settle the loan before the agreed term. It's essential to understand these fees and account for them in your calculations. As for interest rates on residential property bridging loans, they can often be higher compared to standard mortgages due to their short-term nature. Rates can vary depending on factors such as the loan-to-value ratio, the risk associated with the loan, and your financial circumstances. It's crucial to shop around and compare interest rates from different lenders to find the most competitive offer. In summary, a residential property bridging loan can be a useful solution for bridging a financial gap when you're buying and selling properties. Keep in mind that these regulated, secured loans come with higher interest rates and various fees you need to consider. Make sure to research and compare different lenders' offers to ensure you get the best possible deal for your situation. The process of taking out a bridging loan. When you're considering taking out a bridging loan for a residential property, it's essential to understand the process involved. Here, we'll guide you through the steps to ensure you're well prepared and confident in your decision. Firstly, assess your financial situation and determine if a bridging loan is suitable for your needs. You should consider your income and ensure you have a stable source of funds to repay the loan. Also, it's vital to have an effective exit strategy in place, such as selling your current property or refinancing with a long-term mortgage. Next, research and compare various lenders offering bridging loans. While doing so, look for those regulated by the Financial Conduct Authority to ensure they adhere to ethical lending practices. It's crucial to compare interest rates, fees, and the overall affordability of the loans to find the best deal for your needs. Upon selecting a suitable lender, you'll need to provide the necessary documentation for your application. This may include proof of income, bank statements, property details, and your proposed exit strategy. The lender will also require information on the security you'll be providing, which is usually the property you're buying or your current home. Once the lender receives your application, they'll assess your financial background, the viability of your exit strategy, and the property's value to determine if you qualify for the bridging loan. If approved, a charge will be placed on your property, which serves as a legal agreement prioritizing which lenders will be repaid first should you fail to repay the loan on time. After approval, funds are typically released much quicker compared to traditional mortgages, allowing you to bridge the gap in financing and proceed with your property transaction. Keep in mind that bridging loans are short-term financing options, so ensure you have a feasible plan to repay the loan within the specified period. By following this process and keeping a clear, knowledgeable, and neutral approach, you should feel confident navigating the world of residential property bridging loans. The role of brokers in bridging loans. When dealing with residential property bridging loans, brokers play a crucial role in helping you navigate the complex financial market. Firstly, they have expert knowledge in specialist finance and can assist you in finding the most suitable closed bridging loans for your specific situation. A broker can assess your property's equity, which is vital when securing a bridging loan, as it acts as the loan's security. Their experience can help you understand the available options and identify the most competitive offers in the market. In addition to using their knowledge to find the best deals, brokers are skilled in negotiations. They can help minimize your expense by negotiating favorable terms and interest rates with lenders. Remember, these short-term finance products can have higher interest rates, so having a broker on your side can save you money in the long run. Moreover, brokers often have access to a wider range of products and lenders than you can find independently. This is due to their extensive network, meaning they can find bespoke solutions tailored to your unique needs, significantly increasing the likelihood of a successful outcome. It's important to understand that working with an experienced broker can save you time, stress, and money in the process of obtaining a residential property bridging loan. Their expertise and guidance can prove invaluable when navigating the often confusing world of specialist finance, and their ability to find competitive offers and negotiate favorable terms on your behalf will ultimately benefit your financial well-being. Navigating the property chain. Navigating the property chain can be a challenging and stressful experience, especially when you're required to borrow money to achieve your goals. A residential bridging loan serves as a temporary solution to help you manage this process smoothly and efficiently. When you find yourself in a property chain, you may experience a funding gap. For example, you need to buy a new home before selling your current one. In this scenario, a bridging loan can provide the financial flexibility and ease you require. You can use this short-term funding to secure the new property and repay it once the sale of your old home is finalized. The duration of these loans may range from a few weeks to several months, providing an appropriate degree of flexibility. One advantage of using a bridging loan to support your property chain journey is the relatively quick access to funds. Since these loans are often used in time-sensitive situations, e.g., buying at auction, lenders typically process them faster than traditional mortgage applications. This speediness ensures that you can act swiftly when you find your dream home. To maintain a clear and confident approach when navigating the property chain, it's essential to do your homework and research various bridging loan providers. Compare their interest rates, fees, and terms to find the best fit for your situation. Remember, while a bridging loan can be instrumental in helping you secure your desired property, it's crucial to act responsibly and assess your finances before deciding to pursue this path. In summary, by considering the factors mentioned above, you can effectively navigate the property chain with a residential bridging loan, providing you with the financial flexibility and confidence you need during this potentially stressful process. Bridging loans for investors. As an investor, you might find yourself in need of quick financing to secure a property transaction or simply bridge the gap between purchasing and selling. Bridging loans serve as an apt solution for you in such scenarios, offering short-term funding when traditional mortgages may not be feasible or timely. It is common for investors to use bridging loans for renovating, buying a property at auction, or taking advantage of time-sensitive investment opportunities. Typically, you can access loan amounts ranging from £25,000 to £25 million, depending on the value of the property being used as collateral. Don't worry if your credit history isn't perfect. Lenders are usually more focused on the viability of the property transaction and your exit strategy rather than solely relying on your credit score. However, always be mindful to borrow only what you need, as bridging loans can be more expensive than traditional financing due to higher interest rates and various fees involved. A crucial aspect of securing a bridging loan is establishing trust between you and the lender. To build this relationship, ensure that you have a clear and transparent exit strategy, demonstrating how you intend to repay the loan within the agreed time frame. Common exit strategies include refinancing with a traditional mortgage or selling the property at a profit. In summary, you, as an investor, can greatly benefit from bridging loans by accessing quick financing for a range of property transactions. By understanding the loan terms, establishing trust with lenders, and having a clear exit strategy, you can efficiently meet your investment goals. Financing and bridging loans. When considering financing options for a residential property, especially if you're planning to buy a property at auction in England, bridging loans can be a suitable alternative to traditional mortgages. They offer short-term finance solutions that allow you to secure a property quickly and efficiently. Bridging loans are designed to bridge the funding gap between the purchase of a new property and the sale of your existing one or the receipt of other funds. As a secured loan, it is set against an asset, typically a property or multiple properties. When opting for a bridging loan, be aware that if you cannot make the repayments, you risk losing the asset secured against it. There are two types of bridging loans, open and closed. Open bridging loans have no fixed repayment date, giving you greater flexibility with repayments. However, they usually require a clear exit strategy to be in place, such as selling a property or securing a long-term mortgage. Closed bridging loans, on the other hand, come with a fixed repayment date, typically within 6 to 12 months. Repayment is usually expected when the property sells or when you secure long-term financing. With bridging loans, you can typically borrow between £50,000 and £10 million, depending on the amount of equity you have available. The maximum loan, including interest, is normally limited to 75% loan to value. Keep in mind that bridging loans often come with higher interest rates compared to traditional mortgages. It's always worthwhile to compare deals from different lenders to ensure you find the best offer. In summary, bridging loans can be a valuable tool in certain financing situations, particularly when purchasing properties at auction or when a quick sale is beneficial. Be sure to weigh the risks and benefits of this type of financing and consult with a financial advisor if necessary. Understanding repayment dates. When considering a residential property bridging loan, it's essential to understand the repayment dates. In general, bridging loans are a short-term financing option, typically lasting from a few weeks up to 2 years. The repayment date is a crucial aspect that directly impacts your overall financial planning. There are two types of bridging loans, open and closed loans. In an open bridging loan, there is no fixed repayment date. However, you're usually expected to repay the loan within 1 or 2 years. Though this type of loan provides more flexibility, it often comes with higher interest rates. To secure an open bridging loan, you may need to present a clear repayment strategy, such as selling a property or obtaining long-term financing. On the other hand, a closed bridging loan has a fixed repayment date. This date is generally aligned with when your funds will become available. Closed bridging loans are ideal for situations where you have a definite exit plan, such as selling your current home to fund the purchase of a new property. Due to the set repayment date, closed bridging loans often have lower interest rates compared to open loans. When choosing a lender for your bridging loan, consider alternative lenders as they may offer more competitive rates and terms. Alternative lenders may have more flexible lending criteria and can often provide quicker decisions. However, always weigh the pros and cons of working with different lenders and ensure they are reputable and trustworthy. As residential property bridging loans are short-term solutions, it is crucial to have a viable repayment strategy in place. This could involve obtaining a traditional mortgage, selling a property, or even downsizing to a smaller home. Regardless of your chosen strategy, always plan for contingencies and ensure you understand the implications of the repayment date on your overall financial health. Remember, bridging loans can be a useful tool for securing a property when time is of the essence. However, understanding the repayment dates and planning accordingly will help you make an informed decision and ensure the loan suits your needs. Auction property and bridging loans. When you decide to purchase an auction property, it's essential to have the necessary funds available within a short time frame. As properties purchased at auction typically need to be completed within 28 days, a fast financing option is crucial. This is where a bridging loan can be extremely beneficial. Bridging loans can offer you quick access to funding when you need it most. This type of loan is particularly helpful if you're looking to downsize but want to buy your new property before selling your current one. With bridging loan, you can secure the funding needed for your residential property purchase within a matter of days. A key benefit of bridging loans is the ability to have the interest rolled up, meaning the interest payments are deferred and added to the total loan amount. This allows you to focus on securing your auction property without the immediate worry of monthly payments. However, it's important to remember that bridging loans should only be used as a short-term financing solution. The loan term typically ranges from 3 to 24 months, and you must have a clear plan in place for repaying the loan at the end of the term. In summary, bridging loans can be an effective solution for securing auction properties, allowing you to act quickly and confidently in the fast-paced auction environment. Just remember to consider all the risks and benefits and have a solid exit strategy in place to ensure you can repay the loan successfully. Traversing loan-to-value rates. When considering a residential bridging loan, it's essential to understand the loan-to-value (LTV) rates. The LTV rate is the amount of the loan compared to the value of the property you're purchasing. Typically, with such loans, you can borrow up to 75% of the property's value, source. However, in some cases, this can vary depending on whether you have additional assets to use as security. It's crucial to accurately assess your current financial situation and the value of the property you're seeking the loan for. Using a bridging loan calculator can help you determine the appropriate loan amount, interest rates, and potential fees associated with your situation. A residential bridging loan is a secured loan, which means you'll need to provide collateral, such as the property in question, to back your loan. Failure to repay the loan in the specified time frame may result in losing the collateral. For this reason, it's critical to be confident in your ability to repay the loan within the agreed terms. In some cases, residential bridging loans can be used to secure development finance. This type of funding is suitable for property developers looking to finance new building projects or renovation works. The LTV rates for development finance may differ from traditional residential bridging loans, due to the nature of the project and the associated risks involved. Before committing to a residential bridging loan, make sure you thoroughly research available options and consult with a knowledgeable advisor, to ensure you're making the best decision for your specific circumstances. Keep in mind that bridging loans typically come with higher interest rates compared to traditional mortgages, so it's essential to evaluate the costs and benefits carefully. Short-term and traditional financing. When you need financing to purchase a residential property, you may consider various options, such as a standard mortgage or short-term financing like a residential bridging loan. Let's discuss the differences between these options and how they can be suitable for your property finance needs. A standard mortgage is a long-term financing option that is generally offered by banks and building societies. It provides funds to purchase a property, and is usually repaid over a period of 10 to 30 years. Traditional mortgages are suitable if you have a stable income and can meet the required credit criteria. Additionally, they offer predictable monthly payments and relatively low interest rates. On the other hand, short-term financing options like bridging loans can be helpful in situations where you need quick access to funds, or when a traditional mortgage may not be suitable. For example, if you're looking to buy a new property before selling your existing one, or if you need funds for a property development project, a residential bridging loan may be the ideal solution. Bridging loans differ from traditional mortgages, as they can be secured against a variety of assets, including residential and commercial properties, land without planning permission, or even plots earmarked for development. You can typically borrow up to 75% of the property's value, and the loan duration can range from 1 month to 1 or 2 years, making it a flexible property finance option. It's important to note that bridging loans generally have higher interest rates compared to traditional mortgages, due to the increased risk and shorter loan terms involved. If you're considering this option, ensure that you have a solid exit strategy in place to repay the loan, either by selling your existing property or obtaining long-term financing. Another short-term financing option is a second charge bridging loan. This type of loan is secured against the equity in your current property, and can be used to raise additional funds for various purposes, such as home improvements, debt consolidation, or even as a deposit for a new property. It requires careful consideration, as it comes with a higher interest rate and may affect your ability to obtain other forms of financing in the future. Ultimately, choosing the right property finance option depends on your personal circumstances and financial goals. Whether you opt for a traditional mortgage or short-term financing like a bridging loan, it's important to carefully assess your needs and consult with a financial advisor to ensure that you make the best decision for your situation. Property development and bridging loans. As you delve into the world of property development, you might find yourself in need of bridging loans. These short-term financing options can act as a vital lifeline, particularly when you require large sums of money to secure a new investment or complete a project. In this guide, we explore how bridging loans can support your property development ventures across the UK, including in Wales. Bridging loans are often seen as a last resort, but they can provide you with speedy access to funds when needed. Secured on residential property, these loans are designed to bridge a funding gap, for instance, when purchasing a new home before selling your current one. With their fast-arranging nature and flexible terms, bridging loans can be a valuable financial tool for property developers. While property development in Wales or anywhere else in the UK can be lucrative, it is essential to ensure that you are authorised to carry out construction and alterations. Securing the necessary permits, planning permissions, and inspecting for any conservation areas are some essential considerations to abide by the legal requirements. Bridging loans for property development have some notable benefits too. Rapid access to funds. As a developer, you'll appreciate how crucial it is to secure funding quickly. Bridging loans can be arranged in a short amount of time, allowing you to move forward with your project confidently. Flexible repayment terms. Unlike traditional loans, the entire loan amount can be repaid at the end of the term, removing the stress of ongoing installments. Compatibility with other financing options. Bridging loans can sit behind other forms of finance, such as mortgages or primary loans, making them a versatile and useful addition to your financial toolkit. In conclusion, bridging loans can play a significant role in supporting your property development projects. If you require immediate access to large sums of money to bridge a funding gap, consider exploring this flexible financing option. Just ensure you are authorised to carry out the necessary property development tasks, whether in Wales or any other region in the UK. What is the process for obtaining a residential bridging loan? To obtain a residential bridging loan, you'll first need to find a suitable lender and submit an application. This typically involves providing information about your property and your financial situation, including details of the property you're hoping to buy or sell. Once your application has been accepted, the lender will arrange a valuation of the properties involved and, if satisfactory, will then issue you with a formal loan offer. Upon acceptance, the funds will be released, and you can complete the bridging process. What are the typical repayment terms for a bridging loan? Repayment terms for residential bridging loans can vary, but they generally range from 6 months to a few years. Bridging loans are short-term financing options designed to help you bridge the funding gap between the purchase of a new property and the sale of your current one. Once your situation is resolved, for example, by selling your property, you'll be expected to repay the loan in full. How is the interest calculated on a residential bridging loan? Interest on a residential bridging loan is typically calculated monthly based on the outstanding balance. Some lenders may offer an interest-only option, which means you pay only the interest charges during the term of the loan and then repay the principal amount in full at the end of the term. You can also choose between a fixed or variable interest rate, depending on the lender's offerings and your preference. It's important to compare the total cost of borrowing before committing to a specific loan. When is a residential bridging loan more beneficial than a mortgage? A residential bridging loan can be more beneficial than a mortgage in certain scenarios, such as when you need to purchase a property before selling your current one. This allows you to secure the new property without being obligated to sell your current property within a tight time frame, potentially giving you more time to achieve a higher sale price. Additionally, bridging loans can be advantageous for properties that are considered unmortgageable, allowing you to complete renovations before refinancing with a traditional mortgage. What are the main reasons people opt for residential bridging loans? There are several reasons people choose residential bridging loans, including the need for quick funding, buying properties at auction, or financing property renovations. They're also useful when downsizing or upsizing, as they allow you to acquire the new property without waiting for the completion of your current property sale. Investors and property developers also benefit from residential bridging loans, as they often require flexible and short-term financing solutions. Are there any specific eligibility criteria to qualify for this type of loan? Residential bridging loans are secured loans, meaning you must have an asset, typically a property or multiple properties, to set against them. Lenders will also consider your credit history and financial standing when assessing eligibility. It's important to note that, should you fail to repay the loan, you risk losing the asset secured against it. To improve your chances of approval, ensure you have a clear exit strategy to repay the loan and can demonstrate your ability to cover interest payments throughout the loan term. For more information, you can contact us by clicking the link in the description of this video. Thank you for listening to our podcast. We look forward to coming together again in the next episode to share more information and experience with you. For now, goodbye.